Right. It's 15 December 2012 and it becomes imperative for us to find where Nifty will move in the calendar year 2013. And the chart before you is a Nifty 1 month chart. It is weekly charts, and what we are seeing here is a calendar year 2010, 2011 and 2012. Nifty started from around 4600 and moved to the previous highs that were around 6300 and plus in November 2010. Then there was a grinding fall, and after that fall they find the support at the same price where the Nifty started in calendar year 2010. And then in this December-February rally of December 11, this February 12 rally, Nifty find resistance at 5700. Again the prices had a fall, and after that, like for last 6 months, Nifty is moving up. So what we find here is that for much of the 3 years, much of the time, the prices were well into this particular region of 5700 to 4600, and now it seems that they have finally broken out. This was a trend line which was providing a great resistance, and so the first sign was the breaking of this trend line. The move couldn't sustain and the prices came tumbling down. After that, this was a great bullish engulfing pattern here, and this was quite enough to have a start of the rally. Also the prices were above the 50-week moving average. Now what we see here is a daily chart, that is end of the day chart for the from the start of the year. This was this rally came down here again at the level of 4800. It was kind of a double bottom, and then prices start moving, had find that multiple resistances are around here, negotiated their way fine. What you find here is an interesting thing of higher highs and higher lows. These are the lows 1, 2, 3, and these are all highs, and the lows are always made highs and the highs are always made high. This was the high one we can see, serious high. The second was here, and the third will be in the making. So what, according to the Dow theory, we can assume that these higher highs and higher lows are a precursor to a greater rally. We will stop, that this rally is going to stop once a lower low is being made. Also what we can see that there are unfinished gaps, and we are talking about very recent gaps. So the first recent gap is around 5860 to 5830, and the second gap, which seems very prominent, which will provide a great support, is around 5455 to 5530. Now a very interesting thing is there on the charts is that there is a serious trend line which is providing support to the prices, and till the time this trend line is being broken on the downside in near term, that will be the first major signal that the prices can go down. And so we didn't have to worry till the time this trend line is broken for any major downfall to be ensued. Also what we find here is an upward trending channel, and so the prices were more likely to move upward rather than downwards. And the last but not the least, a very important thing, that if we are biased about the bullishness, what are the factors that we have to keep in mind? The first thing that we have to keep in mind is around the support. The first support is around 5830, which will also fill the gap. The second, a very solid support, is around 5550 to 5440, where that next gap will be filled. And this can be a region where we can think that the prices will find support at this way, and also a 200 DMA, which will be somewhere here when the prices comes down. The most worrying part is the volumes are conspicuously absent. What we see here is the last so many days the volumes were good, and any move that is going upwards and is trying to make a new high is to be supported by volumes. Also the open interest is very good. So what we can be having a long bias with a serious stop at 5830, those who are less aggressive, or those who have kind of a positional view on Nifty can think of a stop loss somewhere in the region of 5450, 5500, 5550. Below that they can put a stop loss. Till the time Nifty shows anything else, what we can think about is that Nifty's journey is towards its previous high of 6300 and plus. Thank you.